Kelvin, how should longer-term investors approach the China markets? Are they really uninvestable, as JP Morgan said and then didn't say? Or is there compelling value, particularly in the China internet names that have been sold off heavily?
I think the JP Morgan comment was quite unfair, because I think where the Chinese market is concerned, it is actually a purer, more accurate reflection of the fundamentals of the economy and the fundamentals of the regulatory environment, right? And that's one of the reasons why the Chinese market is trading where it is right now, at extreme valuations, because of the fact that, there were concerns about the regulatory crackdown, which I think yesterday, Vice Premier Liu He did go some way towards reassuring the markets on. The market is not distorted by quantitative easing. It is not distorted by very, very low interest rates. It is basically a reflection of the economy. It's a reflection of the fact that, you had zero COVID policy happening, you had COVID lockdowns, and therefore, consumption has been hurt and industrial production has been hurt. The US markets, on the other hand, has actually been distorted by quantitative easing. I think if you look back towards the markets from 2008 to now, you can actually explain that 50% of the change in the market cap of the S&P 500 has largely been because of the fact that the Federal Reserve has been actually expanding the balance sheet from 1.6 to 1.8 trillion to where it is now today. So I would think that it's actually a lot easier where clarity is concerned with regards to the Chinese market than with the US markets at this point in time.
And Cal, just to round off, how are you positioning in India and Indonesia in a higher rates environment? Because there is a sense that they are in a very different paradigm compared to where they were in 2013.
Yeah, I think if you look at Indonesia, it's a very interesting market because Indonesia is both a beneficiary of very high commodity prices, and at the same time, you have inflation concerns now starting to actually feed in. But I think Indonesia is better able to deal with inflation today because the reforms and the restructuring that President Jokowi has put in place since he came to power quite some time ago is now starting to actually bear fruits in the sense that you're not going to get the capacity constraints that you had before, and therefore with that you're getting better revenue coming through, and that the current account deficit has actually narrowed quite significantly. And that's been reflected in the rupiah. The rupiah has been very, very resilient, has actually not moved very much since the start of this year. Now, on top of that, with more revenue coming through, you're getting consumption actually kicking in. But they do need to watch the fuel prices because that, in turn, has the ability or the potential to actually stir unrest within the economy itself. But I think other than that, the Indonesian economy is actually doing really, really well. Now, India, on the other hand, is now starting to actually see a lot of inflationary pressure coming through. And I think the government is now actually starting to actually prioritize inflation fighting. And that, in turn, basically means that the equities market could perhaps actually come under some pressure as you get earnings growth revisions coming through on a negative basis.